Insurance institutions have been called upon to adopt a risk-based approach in identifying and managing their anti-money laundering AML and the combating of the financing of terrorism CFT mechanism. At the launch of guidelines on AML's CFT by the National Insurance Commission, participants lauded the paradigm shift from the elimination of the canker to its containment.
Money laundering and terrorism financing remains a global concern considering the high risk it poses to the global financial market. With recent reports of increased terrorism in some West African countries, Ghana stands the risk of being caught in the mess if precautionary measures are not taken. An evaluation of Ghana's AML CFT compliance conducted by the Intergovernmental Action Group Against Money Laundering in West Africa, GBC, scored Ghana 0 out of the 16 key and core financial action task force FATF recommendations pass mark of 10/16. The FATF says the performance of Ghana in AML CFT is not that good.
The FIC has received a total of 248 suspicious transactions reports, out of which 107 were disseminated to appropriate authorities as intelligence. Over $9.5 million believed to be proceeds of crime have been frozen and $2.57 million confiscated to the state.
Undoubtedly, the magnitude of the twin crimes and the implications on the economy of the sub-region are worrisome.
Criminals look for ways of concealing the illegitimate origin of funds. The products and the transactions of insurers provide the opportunity to launder money or to finance terrorism, exposing the industry to legal, operational, and reputational risks.
Financial intelligence experts prefer containment of the problem to its elimination. This informed the formulation of the guidelines on anti-money laundering and combating financing of terrorism for the financial sector regulators, comprising the National Insurance Commission, the Securities and Exchange Commission, and the Bank of Ghana, as a measure to contain the menace. The NIC is the last of the three to launch its guidelines in the fight against money laundering and the financing of terrorism. According to Commissioner of Insurance Nyamikeh Kyiamah, insurance entities face serious financial and reputational damage if they fail to manage risk, including being used to launder the proceeds of crime adequately.
The NIC will embark on capacity building initiatives to upgrade its understanding of the risks in relation to money laundering and the financing of terrorism, to which insurance and insurance intermediaries are exposed as a result of their activities and the products and services being offered by them.
The guidelines was jointly prepared by the Financial Intelligence Center and the National Insurance Commission. It is consistent with Section 6 of the Anti-Money Laundering Act 2008, Act 749, and also serves as a fulfillment of Regulation 38 Anti-Money Laundering Regulations 2011.